Hello and welcome to 11FS Spotlight. I'm Daphne Rocke, and in this weekly show, we shine a spotlight on the best and the brightest in the tech and financial services industry to try and understand what gets them going, growing, and what they think the future of the industry will look like. On today's Spotlight, I'm very excited to be joined by Sarah Touzani, COO at Creditspring. How are you today, Sarah?
Hi, Daphne. I'm good. I'm just back from a little holiday, which has been basically the first time in about 2 years. So I'm as good as I can be.
Where'd you go?
Mexico.
Ooh, sunny.
Yeah,
Hopefully
that's why you can
here.
you can see a bit of a tan on my face.
Looks great.
Thanks.
So on today's show, we are going to talk about Sarah's career and take a deep dive into the current credit sphere and what is driving change. So let's start off. Can you give us a 1-minute elevator pitch for Creditspring?
Of course. So at Creditspring, we believe consumer credit is broken in the UK. A big portion of the UK population that cannot have access to ethical ways of borrowing. So we came up with Creditspring about 4 years ago to improve financial stability for those people and put money back in their pockets that was basically taken by short-term high credit lenders.
Cool. And can you tell us a bit about your role? What do you do?
So I'm Chief Operations Officer at Creditspring. I lead several teams in the company from customer operations, business operations, BI, and as well as growth and marketing. The way I see my job is being the glue in the company. So basically making sure that every team works well, performs at their best, and knows is aligned on the company's mission and knows where we're going, and that we don't get slowed down by silos of lack of communication.
Cool. Sounds like a very, very important job. How was it for you over the last year transitioning to remote working?
It went well. So interestingly, my CEO has been a bit of, I wouldn't say a visionary, but kind of so it's come in a bit before everyone was forced into lockdown. So we have started making everyone work remotely for a couple of days a week from January. So basically 2 months before everyone went into lockdown in the UK. And that made us basically foresee any issues that we would have only discovered once we were forced into lockdown a couple of weeks after. So we got rid of all those issues before we got into full remote mode, and we have been quite lucky in doing that. So yeah, we're doing fine now.
Cool. So what's your favorite part of the job?
I would say culture. I know this is a word that you keep on hearing whenever you speak to tech people or startup people, and it's a bit vague. It's hard to define, but I think what is core to Creditspring and what has made us as successful as we are now is the fact that we keep on working as a small company, even though we are 40 now, and making sure that even though we are hiring at a crazy rate, we can keep everyone as involved, as motivated as it was the case when I joined and we were 5 or 6 people in a tiny office. So this is definitely a challenge when companies start to grow and are in a phase of hyper growth like we are in now. But it's also super exciting because if you get it right, you're unstoppable.
Yeah, I mean, it's great to hear that your company's growing. It just means that your mission can expand.
Yeah.
What has led you to your job today?
Okay, so I have a bit of I wouldn't say a weird experience, but I don't come from a startup background originally. When I graduated, so I went to a business school back in France, which you can probably hear from my accent. I'm Moroccan. I moved to Paris to study, then lived there for more than 10 years, and then moved to the UK for this job. So I worked mostly for big banks and big insurance companies back in France, and I started getting frustrated by how fast things moved in bigger organizations and also how far everyone is from the end customer. So I got involved in several startups back in Paris, and then I had this opportunity to join Creditspring, and I moved to London for it. And yeah, I know the industry, but I come from a completely different background from a company where we were thousands of team members, and I moved from that to a 5-people startup. So yeah,
Wow.
that was a change. Yeah.
Wow, that's super cool. How would you say that your experience working in a different bank, or even not a different bank, but working in big financial corporations and working in a different country, what would you say from those experiences have helped you in this role in Creditspring?
So interestingly, France and I think other continental European countries have a completely different relationship with credit than the UK has. The UK probably is the European country that is the closest to what the US has in terms of credit relationship to credit scores. Everyone has a credit card and things like that. Whereas in France, it's more of a savings country. So no one borrows, and it's quite frowned upon if you actually borrow money to buy stuff. So I think it gave me a fresh pair of eyes when looking at customer behaviors, their relationship with loans, and also their understanding of regulation, because regulation is is overall quite different in France, and also the behaviors are quite different. And I think there is probably a balance between the two countries in terms of how we interact with loans as customers.
It's very interesting to see the different cultural perspective towards credit in different countries. I just came off a project where we were trying to understand financial well-being with Canadians, and I learned so much about how Canadians perceive credit very differently. It's almost like a normal thing in society. Almost everyone has it. But
Yeah.
let's talk more about the bigger picture and the need for affordable and accessible credit. So what does the current landscape look like? Is credit affordable right now?
Well, I will say it depends on who you are. Our target demographic is near prime borrowers. So near prime are people who are not going to be in financial difficulty necessarily, but might have what we call a thin file. So people who are 20, just starting their active lives and have never borrowed before, so are not known by the big credit agencies, or people who have not borrowed in a while because they are 80, they paid back their mortgage, and now they didn't need credit for a while, so they kind of disappeared again for credit agencies, or someone who has had issues in the past and is trying to get out of them and their situation is getting better. So that's basically 10 million people in the UK, and are from research that we have been doing. And these guys are I would say underserved. Unfortunately, when we started in the market, so about 3 years ago, we were the only player in the range of APR that we were in and offering to this target demographic, that wasn't a non-profit. So basically all the other actors that were giving affordable loans at the same type of price range as us were not-for-profit. And we believe this can be done by companies, and we can't only rely on non-profits or credit unions to serve this population.
Very, very interesting. Also, the credit is something I'm trying to learn about. I'm in my early 20s, never used it before, so this is it's very interesting for me.
Yeah, definitely. And I would say, just as an advice, because I've been in the same case as you, when I moved to the UK, I didn't have a credit file. Like, no credit agency would even know who I am or find my name. If I applied to anything, you need to start as fast as you can, as early as you can, because you never know when you would actually need that. And this is also something that we have been working on at Creditspring, helping people prepare for an unexpected expense and not find themselves forced to borrow at the last responsible moment when they don't have the right mindset to be looking for loans online or wherever.
Yeah, it's kind of making sure that they're educated enough or have like the mental, they understand what is needed.
Yeah.
So I wanted to talk about Step, which is Creditspring's latest credit builder product that launched in September. It helps members gradually improve their credit score without running the risk of incurring further debt. So could you tell us more about this product, please?
Yes, so this aligns nicely with what we were discussing just now. So we have been running Creditspring for about 3 years now, and we have always been frustrated not to be able to help a portion of population that applies, of like our members that apply, and we unfortunately don't think they are our loans are going to be affordable for them, or like they're going to end up having difficulties repaying them back. Or people like you or me, when I moved to the UK, actually when I first moved and we started accepting customers, I applied to test if everything in our journey was working, and I got rejected. So a lot of people in our team would still fall in that group, either because of their age or because they moved to the UK recently. And we have been seeing lots of credit builder products going around and coming to the market recently. But how we feel our product is different is it actually gives you a loan attached to that. It's not just, you don't simply pay a fee monthly to see your credit score go up, but we actually trust you with an amount of money. It's a small amount. It's £100 that you need to repay over 4 months. But after that, you get £200, which is a bit higher. And then hopefully what we hope by that is once you have repaid these 2 advances over 12 months, a total of 12 months, we can trust you to get onto one of our other products, either Core or Step, which are our bigger size advances, and basically slowly build your credit, not only your credit score. We have seen lots of other startups and products targeting only increase in a credit score. But we are firm believers that credit scores don't say everything about your financial situation, and that we cannot just rely on credit score to underwrite or decide if you are going to be a good or a bad customer. And we need to look at more stuff. And with this product, it's reported to credit rating agencies exactly as a normal loan, which means it won't only impact your credit score, it will impact other parameters that lenders look into.
Interesting. And you mentioned that there are lots more startups that are entering the industry to help customers have a good credit score. What is driving the need for affordable, accessible credit?
Well, I think there's a little bit of hypocrisy in some circles where we say, oh, if only no one needed loans, if only, like, we shouldn't push people to take out loans. There are other solutions to this issue. It would be great, honestly. Like, we hope no one needs loans, but I don't think this is something that's going to happen overnight. In the meantime, we need to make sure that people who do need loans can get loans that are affordable, easily repayable, and that they understand and they can plan and budget for. And this is what is core to our product. we know that most of our customers, and this comes from research we have done before launching, don't understand APRs, don't understand interest rates, don't know how much they're going to be paying at the end of the month in terms of interests. And this is why our products have a simple membership fee that get paid monthly, no matter what your repayments are. So you can plan. It's a bit like Netflix or Spotify, I would say. You pay this exact amount per month, and then for that fee, you can budget it, plan for it when you do your budget for the month. And when you need the money, you just log in, click on ask for the loan to be sent to your bank account, and you get it in seconds into your bank account.
Wow. Seems like your company also has a role in increasing the literacy of your customers.
No, I was like, yeah, this is definitely a need that we have been seeing, especially with COVID hitting about 2 years ago now. So basically a year after we launched, we found ourselves in a situation where a lot of our customers were struggling financially, and a lot of people who were coming to us for help, we couldn't necessarily help with a loan. So we wanted to give more to our customers and to people who we could not give loans to. And we wanted to build a whole ecosystem around building your financial resilience and your financial stability in order to potentially give you a loan in the future. So this is how we came up with the Stability Hub, which is our free product that everyone can get access to and gives you tips into how to increase your credit score, but not only that, how to improve your overall financial stability. And you also get to know when you are eligible for our Step, Core, or Plus products immediately.
Oh, amazing. As someone that doesn't have any understanding, I feel like that would be a great starting point.
Check it out then.
Yeah, definitely. What are the existing barriers to affordable credit? Why do so many customers find it hard?
So the first bit is we touched upon quickly is understanding what is the actual cost of credit. The FCA has been spending a lot of attention into this. Now we're quite lucky in a way that lots of startups and new actors are coming to this market and trying to help serve underserved populations, but not all products are equal. You have a lot of choice, but it's hard to compare between products. So we need to have a common measure across all products in order for you to know exactly which product fits your need better. We also know that financial resilience and financial issues have actual impact on mental health. So we have been seeing research that shows that if you find yourself in financial difficulty, you're probably not sleeping well. If you're sleep deprived, you probably don't think straight, and it's harder for you to figure out what is the best option for you, especially if there are a lot of hidden costs that you don't see necessarily from the get-go if you apply for loans. So that's definitely an issue. So we are very firm believers in transparency, and we are very much behind the FCA pushing for more transparency in this field. Other than that, I think that for a long period of time, banks and incumbents have been not so much shaken by new entrants in the market. And I feel like with new entrants coming, we can control the costs more of what we are doing and reflect this cost savings into the price that we need to charge customers, and we can make this cost of lending cheaper for customers at the end. We are also using open banking, which is quite powerful when it comes to knowing more and assessing affordability for customers who are thin files, like we discussed also. So again, people like you or me who are either new to the UK or have never borrowed before won't be known by credit rating agencies at all. And it's going to be hard or risky for lenders to trust them with a loan or credit card. Also, with the expansion of the gig economy, people have less constant or consistent income as our parents' generation used to have. So if you are an Uber driver or if you are a freelancer, you might have a big month in terms of income and then a few bad months. And this possibly means that you will need to borrow in some months, and in others you will have you will be able to repay those loans or save money, put money aside in case you are in trouble in the future. And this is quite hard for CRAs to assess. So we have been using open banking for about 2 years or more now to make sure that our end customers are able to afford our loans and can keep up with the repayments, which is more accurate and more up to date than usual data that we get from CRAs.
Interesting. So how do you think, in the coming years, how do you think the role of open banking will evolve in the world of credit?
Open banking is actually quite fascinating. I think when we started using open banking, it was quite new still, and people were really, really worried or afraid of sharing their bank details with us. I remember having calls from customers who were thinking that we actually could empty their bank account, take all the money out and keep it, when actually it's just data that they give us access to. In the last few months and the last year, we have seen trends of a better literacy, I would say, customer literacy around open banking. And also, we have seen that people are more willing to give access to their data through open banking if they are really getting something out of it. So if they know that they can get better credit interest rates on their products, they are more willing to give access than if they don't know what this data is going to be used for. I think COVID, in a weird way, has actually made this a bit more easy for us, and we hope that other lenders, as well as the regulator, is going to keep on pushing this literacy around open banking and a better understanding of how open banking works will drive a bigger adoption.
Cool. It seems like open banking is going to help people understand their finances more. I'm curious to know, how can we encourage more people to educate themselves about their finances and not be afraid of it?
Well, I'm going to be bold and say that I think this could even be taught at school. You come at an age where you need to build your credit file quite fast, actually, like straight out of uni. You actually need to start looking into this, and there's a great difference in between people who are aware of this and can pay attention to their credit file, and people who didn't even know that this is something they needed to do. So I think the best equalizer would be if this was taught at school. Now, as lenders, I think it's also our responsibility to make sure that we make it easier for customers to know what's best for them and how to manage their finances in the best way. I think it's a win-win situation because we can then serve a larger market, and also we know that we are doing something for the best for our customers and helping them. Again, on our Stability Hub, we put the focus on this, and we have been giving feedback and tips to customers in how to best use their how to manage their credit cards, how to manage their loans if they were to repay a loan or credit card, which one to repay first, and things like that. And there's a lot of data that we have access to, again, either through CRAs or through open banking, that we can give back to customers and empower them to use this data to make better informed decisions. Also, I think there's a high, sorry, let me re-say that. We can leverage gamifying these feedback in actionable points and actionable insights, so that people don't get lost in, I don't know, a full book of, oh, this is how you should manage your money. I don't think it's realistic to expect people to be doing that when they are already stretched today, trying to make ends meet due to COVID or due to a high stress job. I think we need to, as lenders, again, we have a responsibility to make it as easy and as clear for our customers as we can.
Cool. Very, very excited about the future of Creditspring. And as we're coming to the end of the show, I'd love to finish off by asking you a question, which you can answer in relation to fintech or just anything else. What advice would you give to your younger self?
This is a good one. I think, not to sound like Steve Jobs in his address at Stanford, but sometimes I think at the beginning of your career, you feel like lots of things that you learn or you go through might seem a bit random, or it's hard to connect the dots in between everything that you do and learn. It was definitely the case for me. I avoided specialization as much as I could from day one. This is why I went to business school, because I could have the broader spectrum coming out of business school. This is why I went into the career choices I made after that. And at points it's hard when you compare it to other like friends of yours who are doing a very specific job and they are very good at one specific thing. And yeah, today, all of that makes sense because all of these little things that I've learned from insurance, for example, which is quite different from what I do today, is actually reusable at Creditspring. Or, I don't know, I do pottery. And you can actually pick up learnings from pottery that you can use on your day-to-day life at work. So, yeah, be happy to learn from as many different sources as possible, and at some point it will all make sense.
Oh, I love that. I feel like I also needed to hear that. So thank you. Before we finish off, what's next for Creditspring?
So we have just hit a big milestone. A few days ago, we have gone over 100,000 customers since we launched currently, and we still are on the path to doubling that over 2022 with a plan to expand to the US, which is the most similar market to the UK in terms of customer behavior towards credit. There is a lot of ideas that we still have in terms of building products, co-building products with our customers. This is how we came up with the idea for Step. We involved them in the decision-making along the way, and there's other products that we have in mind that we are co-creating at the moment, and we wish we can launch in 2022. So stay tuned.
Very exciting. Okay, it's coming to the end of the show. Thank you so much, Sarah, for joining me. Where can people find out more about you and everything you're getting up to?
Thank you for inviting me again. So please go to creditspring.co.uk. You can follow along our journey. We do have a number of open positions at the moment. So yeah, hit our careers page. About, if you want to know more about me, feel free to get in touch either on LinkedIn. It's Sarah Touzani in LinkedIn or Twitter.
Cool. Right. Well, that's all the time we have for this week. Make sure you follow 11FS on LinkedIn, Twitter, and Instagram to stay updated with all the cool stuff that we're doing. And if you enjoy our show, do subscribe to the 11FS YouTube channel where you can also catch up on previous episodes. Have a great week, everyone. Bye, Sarah.
Thank you. Bye.